in income.
Okay. Now, what or who are good candidates for suitors to purchase a business?
Everybody shouldn't own a business.
Right.
Most of us went to college with the idea that we'd get a job with a big company. In my father's generation and your father's generation, they actually thought, well, gee, I'll work for that company until I retire.
Right.
And then I'll have a nice retirement and I'll have a nice life. Nowadays, nobody expects really, I think, to work for the same company until they retire, but they expect to have a job, to have their job defined for them, to go there and follow the rules and the procedures and the goals that management has set for them. And if they do those things, they'll be successful and they'll keep getting their paychecks. That's a great mentality for an employee. That doesn't work in small business. In small business, you have to define your own workspace. Sure, you may buy into a business where you start off doing what the former owner did, but there's something called the law of the jungle in small business, and that is evolve or die, because the environment in which you're competing for business is going to change. If you don't change with it, your business will shrivel up and die. So you really need to define your own work. You need to define the tools you're using. You even need to define the goals of your business. Management isn't setting those. You're management now. You need to define your own work hours. And you need to depend on your own initiative. If you're the kind of guy that knows he can sit at home in his robe and watch Good Morning America and drink coffee until 9:30 or 10 every morning, and then go and piddle around the office for a few hours and go home, you're probably not cut out to be in business. Business owners wake up every morning and just can't wait to charge down there because they love doing what they're doing so much they just can't wait to get there and do it some more. And the business owners that are really successful actually have the opposite problem from the hanging around home in your pajamas. It's that their family complains they're spending too much time in their work. So you've really got to be committed to it. You've got to be willing to define your own process, your own goals, your tools. You've got to be able to be willing to take a risk. When small business owners go up to Lake Tahoe and go into one of the casinos, for the most part, they're just not interested in putting a few quarters in a slot machine, because to them that's not gambling. What they do every day is gambling. Big time. So you've got to be willing to take risk, and you've got to be willing to put your money in, knowing that you're depending on yourself, your organization, and your business model to have that money return a profit and come back to you safely.
Okay. Now, if you're selling a business, what communication should be done to the employees? So I think that's a very sensitive area.
It is. That's a tricky question. And two things about that are tricky. One is you may have a contractual obligation to tell them. If you're a union business, your union contract may specify it, or just good union company relations would dictate that you should bring them in on it and let them know what's going on and let them know what to expect. I think sometimes union employees are much more secure in their positions and not as fearful. The problem with most non-union employees is that they really don't know anything about selling businesses. They may not even know businesses can be sold, but they've always heard when someone takes over a business, they're going to clean house. Everybody's going to get fired. So what do? Most of these people are living from paycheck to paycheck. Most of them, really, if they were laid off today, they'd be in big trouble, because they might not even be able to pay their rent on the first without the paycheck they expect to get between now and then. So what do if they find out through rumor that the company is up for sale? They start looking for a job. If enough of these people go looking for a job, it can really harm the company. And they also don't understand about confidentiality. So they might blab to everybody, oh, our company's for sale, and that might harm the company too. I had an instance where we were selling a manufacturing company that had about 75 employees. And inadvertently, someone in the law office faxed something to the shipping department of the company that was being acquired just as they were about a week from closing the sale that had been going on for months through due diligence and all that. And that got photocopied and passed around the company, and within a week, 25 employees out of the 75 had left. And it caused a severe problem. And in fact, since it was the buyer's attorney who caused the problem, the seller and the buyer agreed to close the deal even before he had thought he would be ready, in order to minimize the loss of more employees.
Wow. All right. So now we're getting a little bit into the area of people like you. If I'm going to sell a business, should I hire a business broker to help me? And what can I expect to pay for something like that?
Okay, sure. Would it be okay with you, Mike, if I just tagged on one more little bit about the last subject before I went into that?
Go ahead.
Okay. So most owners don't tell the employees is the whole point.
Yes.
They keep it very secret from the employees until it has been done and they're introducing the new owner.
Yes.
And the new owner is immediately offering all of them their same jobs at the same rate of pay and telling them how valuable they are to him. And so for 2 seconds they get scared and then they go, oh, it's okay.
Oh, okay. Yeah.
and we avoid having
so for the most part, you
sort
of on the QT and
very cloak and dagger.
Yeah.
Very, very much so.
Okay.
Okay. Should I hire a business broker to sell my business? Well, that's a question that about half of the people who sell businesses answer in the negative. About half of the small businesses that are sold in the U.S. are sold without a broker.
Mm-hmm.
This may be good or it may be bad. Brokers tend to bring a lot of value because, frankly, we've been trained in selling businesses. And just as an example, I've been doing this for 25 years. I've sold over 350 businesses. I would hope that I had learned somewhere along the line to add a little value.
Mm-hmm.
So analyzing and presenting the earnings properly is an important thing. A lot of owners don't know that earnings really are the operating income plus non-cash, non-operating, everything the owner pays himself, non-recurring expenses, all lumped up and added together. Mm-hmm. They just look at their bottom line. And if they think, gee, well, I'm supposed to get 3 times earnings for it, they're cheating themselves if that's all they get is 3 times their net operating income. But we add value by showing them where all the money went and what the real earnings of the business are. We also protect the business with maintaining confidentiality throughout the process. Mm-hmm. And you don't want the business to be harmed by having your competitors find out you're for sale and selling against you, saying, well, don't buy from them because your warranty will be no good. They're selling the company. And a lot of times in businesses where warranties are very important, that's caused the business that's trying to sell to actually go out of business because their sales tanked so much. Wow. We coach the owners on what to do to add value to their business. And over a period of months or a year, they can add quite a lot of value based on our coaching. Mm-hmm. We manage the process. Mm-hmm. And one important thing about valuation is not only is the amount of earnings important, but the trend of earnings is important. Mm-hmm. Just like when you're thinking about buying a stock on the stock market, if the price is trending down, well, you're probably not going to buy that, right? You're going to wait till it's going up. You say, oh, now it's a good time to buy. Well, if the sales in a small business are going down, nobody wants to buy it and have their net worth diminish as the business continues to decline. So if a business owner is tied up spending a lot of time trying to sell his business, he may not be paying attention to all those things that make the sales continue up. If the sales start trending down while he's in the middle of trying to sell it, the buyer's going to want to renegotiate the price down or back away altogether. So it's very important for the seller to be able to keep adding value and building the business while the broker does all the grunt work, the time-consuming things to get the business sold.
Okay, gee, we're running out of time here quickly. I'm trying to think of okay. Here's a good one, I think. Let's say I'm going to sell a business. Should I be trying to continue to work in that business after I sell it?
In some cases, that's a great thing. In almost all cases, the buyer will insist that the seller works there for a transition period.
Yeah.
Because what's really important about businesses, like your quote earlier, the customers, well, what's important about the customers is the relationship with the customers.
Right.
If the customers personally know the owner, they better transfer that personal relationship to the new owner as well. And likewise, the employees. There's a team there. Even if everybody's reporting directly to the owner and there's no management team, there's a relationship with each of those employees. So it's important to transition that. There's also what we call tribal knowledge. Small businesses don't have everything written down in a big manual. A lot of it is right here, either in the owner's head or in the key employees' heads. If the key employees don't feel good about that new owner, they're probably not going to share that tribal knowledge with him. So establishing a great relationship with the employees in small businesses especially is very critical.
Right. Okay, well, actually we're getting pretty close to the end here, so I think what I'm going to do is I'm just going to throw a question, sort of a softball to you about, just what are some words of wisdom that you have for people that are thinking about selling a business?
Everybody who owns a business one day will no longer own that business. The smart ones will look ahead 2 years to 3 years to the day when they don't want to own that business anymore and begin preparing for that day. In so doing, they will add a lot of value and a lot of marketability to their business so that when the day comes, they'll have a very happy and satisfying result. The worst case scenario is someone who suddenly must sell his business. And in this worst case scenario, they haven't been reporting all their top line. Their books and records are a mess. They're taking out all their profits as expenses to themselves one way or another, trips to Costco or Lake Tahoe or wherever. They can't show any earnings at all. And there's no organization, there's no documentation. They may have customer concentration issues. They may have owner who's a unique talent issues. They may have a lot of issues that could all be dealt with if they had planned ahead. If you think you're ever going to get out of your business, and everybody is, it only makes sense to start preparing for that day, the first day you're in business.
Okay. So maybe not a good idea to die in the saddle.
Totally not.
Okay. All right, folks. Well, this is an important area, a decision, huge decision for people to sell their own business, and maybe another time we'll do one about buying a business. One of the most important decisions that a business owner has to make is how to go about selling their business. We hope that this program has helped you in getting ideas together, things to think about in that process. Greg, I want to thank you very much again for being my guest.
Thanks again.
And folks, we hope you can join us next time on Financial Insider Weekly.